guys, it is Friday, September the 2nd, and we have like kind of a correction in the market. It's been kind of bouncing all around. There's not, we really are in a holiday situation here, so there's not a ton of volume. There's definitely a lot of day traders because it's been such a wild week, and there's so much potential for oddity that it's just a really great time to be a day trader. And then I think the way that you have to look at it as a more fundamental person is that you are getting opportunities to come in and get names at prices that you wouldn't typically be able to get them at. I have most of the indices down. The Russell, probably that's just the index trading differently. And then oil giving back some of its losses, getting back some of its losses from yesterday. I do want to show you the VIX because this is part of the reason I have not been playing the VIX because it has not been behaving normally. It gave back a lot of its losses or gains yesterday and has been trending downwards. And I just think that's because you really don't have a lot of real people in this market right now. And if they are, they're more likely to hedge it out by the end of the day or over the next few days. So really this, I think you almost have to interpret this as trading flat. Now, what I want to do today, after I show you the FinViz, is just talk about the auto manufacturers. As you know, we're in between earnings season right now. There's barely anything trickling out next week. But I've talked about Tesla, Ford, GM, and I play them from time to time. And I thought I would take time in this video to really just talk about Ford, GM, Tesla. Again, past performance, not indicative of future returns. And that kind of just is what it is. Okay, so let's get into that. With FinViz, you can kind of see very mixed results with a lot of companies giving back a bit. I did also, by the way, today take a little bit more Berkshire Hathaway because I'm always trying to accumulate this. Here at the 280 level, it is definitely cheap. Really, you can look at the chart and sometimes it'll fall as low as the 270 level, but this will always, there's nothing wrong with Berkshire Hathaway in this marketplace. If anything, I think they might have some advantages in the insurance business, which I'll have to go through at some point. And it just has to do with the fact that they take a very different type of mark-to-market risk than other companies do, which I think is really hurting some of the insurers as relates to this last quarter. But additionally, I would also mention, so Berkshire, I'm always trying to accumulate a little bit of that whenever it presents itself. And I mean, that company's going to be just fine, as far as that goes. So I would mention that. And I do have a video that's out on Berkshire Hathaway for things that I think really did not get any kind of attention in the press, despite the fact that we are already 2 quarters out of it. Please have a look at that. That may be helpful. And then we've got a whole playlist on Berkshire Hathaway because I'm such a fan. All right, now let's kind of get into the last piece of economic news today was manufacturing goods. It did come in worse than expected, and you kind of saw the market, which started up pretty aggressively, trade down a little bit. You had July down 1, which is a pretty big slowdown in manufacturing, but you had June revised upwards, and you can kind of see what's going on here. This year, manufacturing has been doing fantastically in general for the United States. That is a very different picture from the rest of the world. And yes, it is the case that everybody, because of the Ukrainian conflict, is trying to slow it all down as relates to economic growth. And that is always going to weigh down a bit on all of manufacturing, quite frankly. But I do want to show you some of the nuance to it. And additionally, the reason that I kind of want to do this little tutorial on the autos, not necessarily making an aggressive call one way or the other, but just showing you how to think about it, is because they do feed into some of this situation. And I do think that in a lot of ways, if this is an energy-driven situation, then it does bias the US to have a stronger manufacturing capability than other countries, if for no other reason than the cost of our energy is going to be lower. Now, there's a couple of caveats to that, but let me show you what Europe looks like and what's going on in auto manufacturing. Now, just for some context, we were very bullish and we did play the autos this last quarter. I'll try to link the videos so you guys can see it in the notes. But I wanted to show you the reason that we got very bullish was because after almost a year of not seeing volume, okay, revenue is a different story, volume in the autos pick up, suddenly we saw in both of the rail tracks that go into Michigan, let me back this up so you can see very clearly that this railway runs straight into Michigan. These two rails, CSX and Norfolk Southern, report first before the autos do, or Union Pacific. Sorry, I don't know why I don't have Norfolk here, but Union Pacific and CSX both report before the auto companies did this last quarter, different other quarters. But we saw an up 24% increase in automotive movement. We additionally saw this huge movement in coal, by the way. So I definitely watched these rails. The book that teaches you to do that, oddly enough, is a fictional book called Atlas Shrugged. So everyone's always looking for book recommendations. That one should keep you busy for a while because it's hella long, but there we go. But we saw a 24% increase in autos, and I had not seen that in quarters past as relates to this specific line item. So autos, once manufactured, are 100% delivered by rail to the rest of the United States. Additionally, for Union Pacific, this is where their rail lines go out to the West Coast, most part. You did see an 11% increase year over year on auto deliveries. Okay, this can, even though they may charge a little bit more for the deliveries, when you see such a big increase, you also can presume a volume increase because that's just how it is. All right, now, the other things to kind of give you context is, where are the cars built? Here, the cars, there's a huge demand in China because of the nature of that industry and how old it is and what's going on there versus the rest of the world. You can see that even last year, before we had the full onslaught of what's going on right now on the continent, you had a decrease in auto production in the continent. And whereas we had started, largely speaking, getting our stuffs ramping and going a bit more, and then so on and so forth. I do want to mention that with China, you do have pretty much every auto manufacturer with a facility there, the larger ones, if you will. So BMW, all that stuff is there, making cars on behalf of that whole Volkswagen complex, Toyota as well. So, and then just for context, because when we talk about Tesla, GM, and Ford, the three that I care about in my space, realize that they're not the largest manufacturers in the world, which is why there is a real possibility for the US to do rather well on auto exports in the environment to come. Although some of that may be used car, there's a lot of little nuances to that. So I'm not going to try to feed you guys every single factoid and thing, but just realize we don't, in 2021, the US manufacturers did not make the top three. Okay, now in Europe, just to kind of close that out, this is why I'm saying this is kind of relevant and this is positive. Now, the United States automobile tends to be a lot larger physically. Like they like smaller cars in most of the world. In Latin America and the United States, we tend to like a much bigger vehicle. But just so you can see how it lays out, these are your three big countries that manufacture. And of the three, only France really is got a huge component of its energy source coming from nuclear. The rest do not. So just realize that that's part of a bullish thesis on U.S. auto manufacturing. What they will do about that is hard to say, but it's just something to take note of. Okay, I mean, you still got to get them overseas, and there's some energy cost to do that, but just realize that's going on right now. Now, I want to show you a lot of times people ask me, like, what's it look like between the three fundamentally? Why do we separate Tesla from GM and Ford? I just want to show you the mix of these three companies so that you can kind of get them straight in your head, and perhaps to the extent that you're looking at their financial statements, it makes it a little bit easier when those releases come out to see what was actually going on. Here was Tesla this last quarter. So this is 2022, this last quarter that they reported, and then the comparable quarter from last year. And you can see that you had about 43% in the autos business alone. So Tesla does separate out in its 10K, yeah, it does represent, and it does absolutely separate out the auto revenue from all the other revenue. Service revenue is actually a meaningful component. I am not including it in the number, but you should also include this number, because this is them fixing Teslas that have some malfunction or something. This number, now realize that the three auto manufacturers do not all present their numbers the same way, but really what we're trying to separate out is the energy storage business, which is doing great, but it's such a small component at this point in history. it's not a small business. I mean, it could grow significantly. It's just, how do we deploy? How do we do this? How do we do that? But that's still to come. So they separate out the total cost of revenues, and then they separate out the costs as well. So you can absolutely do a comparable number plus or minus, because there's a couple other things in GM and Ford, but it's approximately correct because there's a couple less things in Tesla. Anyways, 14% operating income, 28% gross margins is what we're seeing for Tesla. And of course, I'm not putting the services and others. It's just the sale of cars. So all in all, if you include just all the businesses that Tesla does, energy generation plus what have you, you do have a slightly lower gross margin, because currently the energy business has a lower gross margin than the autos business, and then the service business as well. Okay, so that is Tesla, 43% top line growth, 14% operating income, and that leads to EPS that's really about 80%. I should have just done the number for myself to make my life easy, but you can see this almost a double, right? Let's just call it a double on net income. Okay. And I look at net income because there is dilution. There's all these other things occasionally. With respect to Ford, here's Ford. You got 50. So Ford had actually a great quarter. I'm going to show you where that quarter came from. But Ford, the credit business as well. So there's really nothing else it does. So you can just take this number. This is 2021. This is the comparable business. This is not the math on that. 40 divided by 26. I'm showing it. Let's just do that math really quick. I'm not sure why I have a typo there, because that can't be right. Is it 40 divided by 26? Yeah. Oh, 53. Okay. So 53% revenue growth. And then 7.3% operating margins. If you scroll on down, you got to remove and then 14.3%. I'm just using cost of sales, gross margins. So your gross margins are significantly lower for a company like Ford. Okay. And then for GM, gross margins around 12%. Revenue growth was minimal, 6% revenue growth year over year. And then by the time you get to operating margin line, you do have significant weakness. Okay. So Tesla is actually developing, just in simple terms, a better automotive business than the other two companies. Okay, but Ford did great this quarter, fair and square. We were bullish Ford this quarter going in, and I want to show you why it did so well. Shoot, I don't think I got all this back. It really, I'm just going to show you these two cash flow statements just because it shows it really clearly. On Ford's cash flow statement, you can kind of see that they had a net income loss last year because of some things. Depreciation is always depreciation, but it's really coming from this wholesale business. Let me get a little thing to make it easier for you guys to see it. The line item. Okay. So this is an increase in finance receivables, and it's coming from the wholesale business. Now, what is the wholesale business? That is trucks, essentially, that go to municipalities, for lack of a better way to say it. And that is the business that helped them out a ton this quarter. As you can see, it does go into receivables, finance receivables, but nonetheless, that is where your biggest uptick is in cash flow from operations. And you can kind of see how big that jump was. That's why we really liked what Ford did this quarter. Can they keep it up next quarter? Some of this money is coming from stimulus package that was released prior to, but possibly yes, possibly no. This market is so volatile. I'm probably going to watch it. And if it gets a little bit weak, that'll be that. Now, we don't see any of this in GM. It's just what you saw before. So there's nothing really important to highlight. So I'm not going to fix that slide while y'all are sitting there on the thing. Tesla, I just want to show you, it doesn't have a meaningful business of that nature coming in here and helping them out for this quarter. But when you hear that kind of talk and discussion, right now that business is all going to Ford. Okay. However, it fair and square just makes it flat off a net income coming in doing great, etc. And with that, that's really all I had prepared for today. I will hit the pause button. Any questions?
Hey, May, great. September usually is a very bad month for stocks. So
Yeah, it
May,
is.
yeah, you got a good bounce today. Good day to hedge. Are you still with NVIDIA? You're looking for, I think you said
You know what?
128.
Yeah, well, I hedged it out a bit. 128 was my aggressive, like, where could it go on the initial downward slide? But I am going to keep some short exposure in NVIDIA. What I did yesterday to close it out a bit, and I closed out some of it because I just, I was very short NVIDIA yesterday after I released all of my, so I had put spreads, I had short call spreads on it, I long or short puts, I was short in a put spread. And so basically I got rid of the leg that would have been considered long and just let it sink down into the muck as on the open. So I had to, I am a little bit scared of having positions that are too aggressive. So I did cover some of it. And then just because today it looked very dead cat bouncy, or I went ahead and just turned it into a calendar diagonal just to let it run out, let the rest of the vol run out today. But I will probably set up slightly short for next week. Now, I do think that here it gets a little bit riskier because what you really, because I mean, it gets riskier only because of timing, so will it decline next week? Will it decline the following week? I don't know the answer to that, but you definitely have some deterioration of the thesis as relates to what's going on because of what's going on in China. And interestingly enough, I think every company, so Broadcom came out and reported earnings, and they were sure to address that they didn't feel that they were going to be impacted by this decision as relates to China. When you go across what kinds of semiconductors different people make, I think the only one that really has the potential to need to also come clean about a notice would be AMD. But maybe I'm wrong on that. But meaning it's possible, but it's not known yet, and they certainly haven't announced it. So I do understand why people might also take some short exposure to AMD. The fact is, though, the real concern that all of us would probably have is, wow, you got some feelings there, US government. Would like to understand how it was this like something specific you found, which is what you were asking yesterday, or is there a potentially bigger problem here that is more geopolitical, weird trade negotiation stuff that we're just starting to see the beginning of? We don't know the answer to that. We do know that the relations between geopolitics is such a powder keg right now. You gotta be so careful. Yeah, so that's really where I stand there.
Well, is it the A100 chip? Is that what it's?
The A100 chip, and then there's another chip that was supposed to come out. That's the upgrade to that, and I think about $500 million of sales was supposed to go to China, which is actually about 6% or so. So it's not totally insignificant.
So you're saying 500 million in NVIDIA was this A100 chip?
No, it's the next chip too, because it's sales projections for next quarter. So that chip is now going to be delayed a little bit. And on top of it, there's the lack of sales that's going to go to China now.
So what's their gross? You're 500 million a year, a quarter?
500 million is what they sell to China off of a $5.6 billion number last quarter.
So 10%. Okay. Gotcha.
Some percent. No, I think, sorry, something's wrong. It's almost, so it ends up being, it ends up from the article being about 6.9%. So I think it's like, I'm rounding up and then rounding down. So it's closer to like, I think it's like 5.7 billion. And then the other number is like 4.6 something, blah, blah, blah. And when you do the math, it comes to about 6.8, 6.9% of sales is that particular impact.
Right. Okay, cool. Thank you for that. Again, you went short 185, so it's now 136.
Yeah. Oh, there's one other thing I just wanted to share, and this is part of the reason why you really can't be short in Tesla so aggressively. And yesterday, when it got a little bit dramatic, let's call it, I did go ahead and try to do put spreads way below where it was trading, because, you know, I'm just using the old numbers of where Tesla used to trade, and then I just divide by 3 so that I can see where approximately. But Tesla does have a bottom as far as that goes. And it really comes from the fact that, like I showed you, they are growing aggressively. Earnings is growing very aggressively year over year. That's, you know, you can kind of see that. Let's go back. You can kind of see that here because they're finally getting economies of scale given where they're finally at this point. Now they got a lot of mess and stuff. This is almost 100% net income growth, right? Okay, but you can kind of see that Tesla right now is trading at a 60 times enterprise value to even EBITDA. Okay, and so that is why it's a little bit dangerous to short Tesla. You always want to buy it on the long side as relates to it. Now, Ford GM's a little bit of a different animal because it can be a little more volatile given what's going on in manufacturing, et cetera. And but in general, U.S. manufacturing is not the dominant car manufacturer of the world. There's still actual room if Europe is going to have difficulties producing due to their energy crisis for U.S. manufacturers to just cosmetically look like a better deal financially overseas. So sorry, I realized I didn't totally put a bow on that. So I'm going to be looking for, you know, look, do I think you pile into it today? I think you got to pick your battles. You know, we got to see what's going on post Labor Day because there, you know, you could see a rally. I don't know which way the market will go on Tuesday of next week. But I do know that you've got a tremendous amount of volatility, so it's good to be up on these names and consider and really understand them, so that when you go to buy, you can take advantage of the weakness in the marketplace. That's all. All right. If
You
there's
know,
no,
I think the big question on Tesla and EVs in general is going to be the infrastructure in California. What has China done? I mean, I think they're probably a leader there.
China and electric vehicles. Well, I think
their infrastructure, the charging
infrastructure.
Right.
I mean, they definitely have it as far as that goes, but then people don't really look. China's just a more dense place to begin with. So you know, driving is not the same as the United States or even Europe for that matter. Most Chinese people do not have a driver's license, professional drivers. If you're in Beijing, Shanghai, whatnot, and you're wealthy as hell, you may drive a car, but mostly you're going to have someone drive for you. So it's not quite what you think. So as far as like, you cannot take a United States thought process and lay it on top of China as relates to how people drive and what the infrastructure is. People don't fill up their own damn gas in China. If you have a car in China, you rich. You got someone else doing that for you.
Okay.
So they'll drive where you need to go. Yeah.
Right, that question.
No, it's okay. It's okay. I didn't mean it. I didn't mean the attitude. I apologize.
Now California's worried about, you know, the power grid.
Yeah, I mean, that'll come up from time to time, but the thing is, we are moving in one direction as relates to moving toward, you know, whether it be we're going to do a lot more in the world of hybrid, or whether we're just going to do charging stations. This is all stuff that just has to happen over time. So, you know, if it provides an opportunity for Tesla, fantastic. The fact is they are somehow managing operations significantly better than their 2 other competitors in the United States. And then overseas, they're doing just fine.
And they have no unions.
Yeah, they don't have unions. It's a good point.
Thank you.
All right. Take care, guys. Bye.